ATV. We've got it all. The CTV National News with Lloyd Robertson.
Good evening. Finance Minister Michael Wilson said tonight the federal deficit is going to be larger than he would like, but any drastic measures to cut it would only make the situation worse. The finance minister said he will not raise taxes or reduce spending in a last-ditch effort to trim the deficit. He said the government is off target because of the slump in oil and grain prices, and that has meant less revenue and more spending. Bob Evans has details.
It was mostly bad news tonight from the finance minister. Canada is in slightly better shape than it was in 1984, but in certain regions it is significantly worse. Lower world oil and grain prices have hit hard regionally. Some Canadian markets have been blasted by growing American protectionism, so the government's drive to reduce the federal deficit has been blocked. It will not come down to less than $30 billion, as the finance minister hoped, but will be about $32 billion. Nevertheless, Wilson says taxes will not go up, and the government is still determined to bring the deficit down.
Now, I want to make it clear, however, that a slower decline in the deficit this year, in the face of extraordinary economic events, does not throw us off our track or lessen our commitment.
Nevertheless, the finance minister is optimistic about next year's economic outlook.
Given the economic outlook for the rest of the year, and by holding to our expenditure target, the deficit will come in at or under $32 billion. This will mean a substantial decline from last year, and it will be the first time in 16 years that the deficit has decreased 2 years in a row.
The finance minister is not at all apologetic about the government's failure to bring down the federal deficit. First, he says, because letting it slide helps cushion the shock of other economic blows. And besides, the government's spending is still on track. Bob Evans, CTV News, Toronto.
Wilson's speech tonight didn't cause any shock waves anywhere. The money market said it only confirmed its own calculations. Disappointment was expressed by Bay Street and by the political opposition. The NDP and Liberal critics would like to have heard more news about helping the unemployed. The business community would have liked tougher measures to combat the deficit. Robert Hurst reports.
When the government predicted in the last budget the deficit would drop below $30 billion, Bay Street was happy. But now that Finance Minister Wilson has failed to deliver, for many the mood has changed.
I think he has done the government a fair amount of harm with the business community by not getting down to that $30 billion figure. I think he's also going to do himself harm internationally.
There's not that aggressive tone in terms of taking some kind of action that I think big parts of the business community would have liked.
Opposition critics were not impressed.
In conclusion, I would say that Mr. Wilson had failed according to his own standard.
There's a real danger that tonight's announcement is going to put downward pressure on the dollar and lead to higher interest rates, which is certainly not going to help Canadians in terms of getting them back to work or getting the economy back in shape.
Starting at 55? Starting, if you like. Okay, thanks a lot.
At Canada's only overnight money trading room at the Bank of Montreal, dealers were spreading the news to clients overseas.
It looks like the budget deficit is going to come in around the $32 billion level, about $2.5 billion worse than previously expected.
Traders say foreign exchange markets had expected Wilson's statement a week ago. That's when the Canadian dollar dipped momentarily below 72 cents. Traders say the good news for money markets is no immediate tax hikes.
I would say that the financial markets were somewhat worried about the fact that there could be some announcement of tax increases. That doesn't appear to have materialized.
The money traders here on the overnight desk say they believe the government's deficit-fighting program is still mostly on track. But they are waiting in anticipation to see how the big corporations and the pension funds react when business opens on Friday morning. Robert Hurst, CTV News, Toronto.
The prospect of tonight's speech by the finance minister in an uncertain financial climate has been putting some downward pressure on the Canadian dollar this week. To ease the pressure, the Bank of Canada raised its central rate slightly today, up to 8.63%. That is not expected to force up rates at the chartered banks. There were new terrorist attacks today against France, this time aimed at Frenchmen in Lebanon. The country's military attaché was shot and killed in Beirut, and 2 French soldiers were injured in southern Lebanon. The attaché was shot while on his way to work this morning at the French embassy. The gunman escaped. The 2 soldiers were injured when a rocket was fired at a French unit with the United Nations peacekeeping force. A Lebanese group issued a statement in Beirut today claiming responsibility for yesterday's bombing at a Paris department store. It didn't outline any demands, but threatened more attacks. In Paris, Prime Minister Jacques Chirac went on television to promise an all-out fight against terrorism. He spoke to a city caught up in fear following this month's wave of bombings, terrorist bombings that have killed 8 people. Jim Munson reports.
Paris buried